Hello good people, it's me Kumanawa, your money manager. In today's video, I want to take you through why our loan application got rejected. Yes, we got rejected at some point. Have we ever been rejected? So if you've been rejected, just know that you are not alone. Many of us have been rejected many times, but we move on. Life has to continue after rejection. And one thing that I've come to realize throughout this journey of being rejected, be accepted, is that once you accept the faith, you would understand that rejection does not mean denial. Rejection is simply delay. It will come at the right time. So today, let me take you through our experience of being rejected. I'm going to take you through why our loan application was rejected. Which loan application am I talking about? Some years back, we submitted an application for funding with one of the development institution. The project that we wanted to get funded was the one that I'm currently working on, the 6 units bachelor pass development in Mau. So, like I've said, we made a couple of mistakes, and along the way, we got stuck. And when we got stuck, this is when we say to ourselves, okay, we've put in a lot of money. Why not approach one of the development financiers and see if we can be successful with being funded to complete the project? So this is the experience that I'm sharing with you today, and I hope that you will also learn from it. The first thing that we did was we visited the financier, the development financier, to get the requirements for financing for property development. We got the requirements and we took a lot of time to work through satisfying every part of the requirement. And if I may tell you, it was sort of a very lengthy process because some of the things that we really had to provide were outside our control, and we had to wait patiently to get them. So what we did here was we ensured that we got everything all together, the entire pack, because we didn't want a situation whereby we are going to submit documents and something is missing, and then there's going to be the back and forth, back and forth, and that could actually delay the entire process. We did not want to do that. So, and also I was taking this from experience. Having worked in a bank, I know how tedious it can be for you to be always sending your customers back, go and get this, you haven't brought this is missing. So I know how tedious that process is. So for me, it was like, let's work through all the requirements and ensure that when we go there, we have everything that they need, such that when they look through their checklist, they're just going to tick everything, tick everything, tick everything. We did exactly that. And if I may take you through some of them, a very important documentation that we had to submit. Some are just the standard requirements, but because it was for property financing, there were also some special documents or requirements that you had to fulfill. The most important one was just making sure that we have title for the property, and that title is in the form of a title deed. We got that one done. And then we had to make sure that we obviously approved plans were a requirement. Approved plans as well as with the building permit from council, we have that one ready. And because there were some existing structures and we were not going there for them to finance everything from start to finish, but to pick us from where we left, we also had to provide some structural report because they had to ensure that whatever we had built was structurally sound. And then we also had to provide a quotation for insurance. Always important to ensure that the property is insured. And very important was to get the bill of quantities. We got the bill of quantities, and we also got the quotations, building quotations from 3 contractors, reputable contractors. They gave us that. And very important as well, to ensure that as soon as you finish building, there is a market that is ready to take up your property. We had to get some pre-leases. That was really the hardest to get, because you are here, you are going to market a property that is not yet built, for people to show interest that as soon as you finish, we will take up the property. And like I said, it was tough, but we were able to do it. We actually got about 6 pre-leases signed, a lot from individuals in the banking sector, young professionals, and we got 2 other letters of intent from 2 companies. That was good. So we got all this thing all together, we submitted, and while we submitted, it was a huge pack like this. So we submitted, and then we were somebody was appointed to look after us. I don't know what they call it, business manager, whatever they call it. And this person went through all the checklists. We were able to get everything signed. So they got our peg, meaning that they were happy with the submission. And now we were ready to proceed to the next stage, which is the credit assessment. Let me share this very important information with you. When they do the credit assessment for your business, you need to remember that this assessment is totally different from the way it's done from an individual point of view. Because the risk is heightened and because it's a company, the assessment will take what we call the 4Cs approach. The 4Cs approach, they are going to look at first the character, second is capacity, third is capital, and fourth is collateral. This is the assessment, or the different stages or the different things that they will look at when they do the assessment to approve you or to reject your application. The first thing that they started with is character assessment. And with character, what do they look at? They would look at the company. So they will assess the credit worthiness of the company. And for them to get the credit worthiness of the company, they look at the credit reference of the company. So obviously for the company, there wasn't any credit reference because this was a startup. It was a newly formed company, no credit reference, no credit backup. So they would move to the next stage, still under character. Now they will assess the credit worthiness of the people behind the business. Remember that for a business, there's always going to be people. This is what we call the jockeys behind the business. So they will assess the credit worthiness of these people behind the business. So they went to that. They checked our credit worthiness, obviously, and I'm not so happy to tell you that they uncovered some things. Our credit history wasn't good. Remember, I have shared that we have gone through some financial difficulties, and when we did this application, this submission, we were actually recovering from our financial difficulties, our financial embarrassment, financial mistakes. So our credit reference was really messed up. It had some few blemishes here and there, and that's what they found out. They realized that we had an account in arrears somewhere, and those arrears had to be settled before they can proceed with the assessment. So they called us, they told us, here is the situation. Your ITC is revealing that you do have an account in arrears. Can you settle this account before we can proceed? We accepted the fate and we took the little resources that we had to pay off the arrears, to settle the arrears, to settle the account. And the next day we submitted the proof of payment to them just to show them that we've actually paid and we are cleared. And for me, I was really, at this point, I was really very optimistic that we've taken away the hurdle that was on the way. We should be able to proceed to the next stage. And then the manager told us that, okay, no, go, we will talk to you in 2 days. We will give you the feedback in 2 days. So for me, it was like, okay, the feedback maybe is relating to the contents of our submission. We waited for 2 days. 2 days later, they're not calling. In the morning and in the afternoon, we decided to call them. Okay, we just calling to find out where we are with our application, if there's any feedback that we need to be aware of. And this is now when they told us that, unfortunately, we will not advance your application to the next stage of assessment. What? I'm just settling the arrears. Now that's me thinking in my mind, okay, well then, and regained our composure, and we had to ask why. They told us, because of your credit reference, we cannot proceed. Rather, we are putting a recommendation that you should be rehabilitated for 12 months. Rehabilitated for 12 months. Is there anything that we can do maybe to skip this rehabilitation thing? Unfortunately, he informed us that it was credit policy and there is absolutely nothing he can do about it. We just had to go through a 12-month period of rehabilitation. Ask me if I was shattered. Yes, I was. was really very hopeful. We've done everything in our power to ensure that the application met all the requirements. I had applied myself, applied my skills, having worked in the banking sector, and I actually compiled the business plan myself, and I know the ratios that they looked at, and everything was just going to tick 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 tick. But unfortunately, see where the application stopped. Character. Why am I sharing this video with you? I'm sharing this with you to remind you that the credit decisions that you make today, decisions to go and take debt here and there and there, and fail to honor those credit obligations, might hinder you at some point in your life when you truly need debt and you want to use it for good things, for building assets. This is a key lesson. Make sure that you are nursing your credit reference. You are leaving a good trail behind, because you never know when you might need a loan. So we got rejected at some point. It meant that the application didn't go through all the other 3 C's. Just the first C, character. You stopped right there. We stopped right there with the first C, character. And if I may just take you through the other C's briefly. Once you have passed the character check, they will proceed to the capacity check. What do they look at in terms of capacity? Capacity, now they're looking at the project and they're looking at the cash flow generation of the project. The question that they're trying to answer is, will this project generate enough cash to pay operating expenses as well as leave enough money to service the debt? Once you have passed this capacity test, well, good, you can proceed to the next C. And that next C is capital. What do we mean by capital here? You know, financiers, they want to put their money where you had put your money first. They want you to put your money first to demonstrate indeed your commitment. Then they will be more than willing to put their money. So here they are looking at your contribution. I'm sure you've heard when you go and apply, they will ask you, what is your contribution? What are you contributing towards the project? You cannot come empty-handed and want or expect them to put 100% of their money while you have put nothing. You've absolutely got nothing to lose if the project doesn't work out. You can walk out free and square. So they want you to commit to the project, and we had really committed. When we calculated everything that we have done, the building to the stage where it was, the professional fees, as well as the land acquisition cost, we had invested close to 600,000 somewhere there, and we were only asking for 1 million to complete the entire project. So you can see our contribution was 600,000, asking for 1 million. So the entire project spent was 1.6 million and 600,000 being our contribution. So it was really a very good or a very significant contribution, because if you look at it, it was more than 30% or so contribution, 35% or somewhere there. So that's the third C. The last C will be collateral. Here you need to remember that financiers, they don't lend to collateral, but rather they lend to cash flow. Cash flow is very important. However, collateral is also very important, because here now they are looking at mitigating some of the risks that they are taking, and that risk is the risk of default. What's the recourse if this thing is not working? What happens? So collateral now is you are bringing in something. It could be a tangible asset that they can take, such that when you fail to pay, they can sell, take the proceeds, pay off the debt. So in the case of a development financing or property financing, so the same property that you are seeking funding for would serve as collateral, which is the positive that you'd have about a property project. So that's it. You see, we all get rejected at one point or another in our lives. But anyway, that rejection, what it did is we abandoned the project. Like I said, we did not have that kind of money to finish the project, but rather we abandoned it and focused on something that we can afford at that time. And now we are trying to figure out how we can complete this project. And the strategy that we are taking here is we are going to work hard to at least finish 3 units to completion, have the tenants in, and then we will reinvest the rentals. But over and above reinvest in the rentals, we will also explore releasing equity on the property, because there is equity that we're building. So that's where we are at the moment, and we will see. But we're very hopeful. It doesn't matter how long it takes, we know that one way or the other we will finish this project. This is all that I wanted to share with you today. Thank you so much for your time. I will see you in another video.